Yesterday was a very interesting and telling day in the crypto market. We saw some exciting highs in terms of prices that we hadn't seen since the middle of last week, which was very cool. And here, fast forward about 12 hours, for 18 hours or so, and we're seeing some prices that we hadn't seen since the lows of Sunday. And we need to talk about the news that kind of drug us all over the place yesterday. We need to talk about some records that were broken, a pretty distinct flip in the crypto market. What does this mean moving forward? And a signal for what may come today. So if you guys are new or haven't already, show your support for the channel down below. Hit that subscribe button, that bell. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So it seems like right now we're kind of mimicking what we did last week. Again, just on a much lesser of a note. If you guys remember, we had those couple days of green, this kind of reversal that had built last weekend, basically into Monday, kind of what we saw here. And then, of course, yesterday we ended up closing on a red note. But yesterday wasn't all red. For those that were paying attention, we actually had a 1 hour candle for ADA that was up 4.38%. We had actually big liquidations that were taking place across the crypto market, sending us on some important retests across the space. You guys can see BTC running all the way up to about 114K. We actually saw Ethereum get up to the top of its trend as well, actually up to 4,100. This was a very exciting time, but as you guys can see on the hourly candle, it got very quickly erased. And by the time that we got to the overseas candle, we got kind of flat. Overnight again, we had an extension from 64 cents down to about 63.5 cents. And then the couple hourly candles this morning, right now it's about 5:35 a.m. Central Standard Time, have also been dragging us down just a little bit. But the big question is, what caused this to take place? What actually sent us into this little frenzy here? Well, first of all, the Federal Reserve said that they are looking into payment accounts that would grant crypto and fintech companies access to Fed payrail systems. So this again is that connection of Web 2 and Web 3 like we've been talking about for years now. And a big government embrace is a pretty big deal. The market started to get pretty excited about this. We also at the same time we're seeing that gold drop off like we talked about. Now, I'll get to that more in just a moment, but this caused a little bit of spark, and what we started to get into was some of these short leverage liquidations. In fact, over the last 24 hours, we saw $298 million worth of shorts liquidated. Now, that doesn't paint the whole picture of the story for the day, because just as we got excited and saw this nice run to the upside, I even made a post about this on Twitter. I said it's exciting, but I'm not trying to get ahead of myself, because how many times have we seen this where we got a nice rally and then just a retracement right off of that? And that's exactly what happened. Unfortunately, this came off of this news, and it feels like the market's just being drug around. Now, Trump has said his scheduled meeting with President Xi Jinping might not happen. Market didn't like that. Market retraced. And we just saw basically all these gains from these 2 hours basically fade away back to nothing. We saw a bunch of longs open that ended up getting liquidated here over the last 24 hours. Liquidations to the tune of $361 million. And this is kind of that whiplash that we've been dealing with here. And so is there manipulation going on? Absolutely. But I think a lot of what this is just people not having that certainty in the market yet. Uncertainty causes people to take short-term profits. Uncertainty causes people to question these rallies. And a lot of times you see this kind of aggressive chopping right around the bottoms of the market, of the charts. And I'm not saying that, this is the absolute bottom, or I'm not saying that, we can't go lower here or anything like that. It seems like, again, we're sticking around these trends, which is a good sign, but you just kind of see that just hesitance in terms of capital in the crypto market. Now, that being said, another thing that got the market very excited yesterday was that $1.75 trillion was wiped out from gold's market cap. This is the largest single day wipeout in gold history. And this is aggressive retraction like we were talking about. And the good news about this is we're retesting this 20-day moving average. This is kind of a focal point for gold now, because if this is the basically start of a breakdown, that's very promising, again, for the crypto market, very promising for ADA, very promising for other assets in general. Now, what we do need to watch is we have retested this and our 50-day moving average many times before. Probably one of the worst ones was back here in April, right before mid-April, gold went on a little bit of a rally. So If we do breach this 20-day, just watch down here at about this 3,800 level in terms of gold. That's what a lot of people are going to be paying attention to right now to see if, hey, this is just a retest or if this is actually a confirmed breakdown. Now, all these reports about, possible trade war ending and government shutdown ending, that is causing people to take their profit in gold and start to move it elsewhere. And it's a very slippery slope when that happens. You can see this turn into a much bigger move, but we'll just have to be patient and wait and see what happens here. But a lot of people during this time took advantage of this opportunity and are still taking advantage of these low prices. For example, institutional money, just like we saw last week, Tuesday, institutional money flipped and started buying very heavily. You guys can see $477 million worth of BTC bought over the last 24 hours. BlackRock leading the way with $210 million worth of BTC purchased. On the Ethereum side, $141 million purchased. So just for some comparison's sake, if we take a look at BTC last week on Tuesday, $102 million. So over 4 times larger than what we saw last week. On the Ethereum side, what we saw here was 141 million added, so slightly smaller than what we saw on Tuesday of last week, but it's still following a very similar trend nonetheless. So that's something that we're going to have to watch. Now, what's interesting is, I keep seeing these comments of people saying, yeah, this won't hold up. I can't see anything that's holding up the crypto market. And, basically people saying that there's no sign of optimism moving forward, which I think is complete ludicrous, because the Fed last week talked about we may be very close to the end of QT. Obviously, there's rate cuts coming. There's spot ETF approvals that are going to be coming down the pipeline. There's all these exciting things, but ignore all that and look at one specific thing. All you need to look at is liquidity. All right. That's something I've talked about very consistently, and I want to point to again. They say, oh, we don't know what there is to hold up the market. Liquidity, capital. What we are seeing is capital remain in the markets, even if it's moving to the sidelines, kind of like we saw over the last 24 to 48 hours here, where people are flocking to stables. You're not seeing that liquidity leave the markets in general. It's not like people are pulling liquidity off exchanges or cashing out and leaving crypto. In fact, what they're doing is they're waiting, they're patient. In fact, over the last 24 hours, what we saw was, lo and behold, another $1 billion in USDT minted on Ethereum. So you're seeing major liquidity injections into the crypto market, but yet have yet to see a lot of that capital actually hit assets. And so that's exactly what's holding the market up right now, and exactly what can take it to new highs. There is easily enough liquidity parked on the sidelines right now to set new all-time highs in the crypto market. We're talking, right now we're at what, $3.6 trillion in terms of the total market cap of crypto. This is enough liquidity to move us somewhere in that, $5.5 to $7 trillion very, very easily. And people ignore that, and that's fine. We're not seeing the signs that you would normally see at a bull market peak. Okay. And I saw somebody else say, oh yeah, it looks like an Adam and Eve top. And it really doesn't. It's very similar to actually what we saw back here in the late part of 2024, early part of 2025, where we did get a pullback off of that. And then guess what? A rip roaring bounce. It seems like that's kind of what we're going through right now. Saw a very similar thing back here, a little bit different structure back in early 2024, but that's why I'm not falling for the fake outs right now. And I'm not saying we can't go lower, but it seems like right now they're trying to just get people to capitulate and dump their bags, and it's screaming from the rooftops that it's over. But then when people least expect it, that's when we rally. It's not anything new. It wouldn't be surprising when it does take place. But one thing I did want to point to is, unfortunately, Jim Cramer this morning said crypto is due for a push today. So that's disappointing, and I think we're all in agreement with this guy that he just needs to stop. Maybe we need a little bit of the opposite announcement from Cramer so we can move to the upside. But big thing I want to point to is everybody this week is focusing on one thing, and that's the CPI report come Friday. So we have about 48 hours until that's going to be coming out, but we'll navigate the day. We'll see what takes place. We have very high volume again across the crypto space, $226 billion in trading volume. So a significant spike. But yeah, that's kind of where we're at. We'll see how the day progresses. So I appreciate you guys. I hope you enjoyed the video. Let me know your thoughts below, but have a great day. Catch you guys in the next one. Take care.